Yeah, so today I want to talk about like what does a bookkeeper actually do? So this was actually inspired by one of my students. I just had a coaching call with her, and I wanted to kind of come and talk about the different things because um, even for people that are accountants and bookkeepers, really understand like what do bookkeepers do? What does bookkeeping actually entail and encompass? It's very helpful because once you know what you're selling, you can sell with a lot more confidence, a lot more vigor, and just kind of feel like you're moving forward in the right direction. So I want to break down four different levels of bookkeeping. So level one, okay, and again, this came from like a conversation. So on one screen, I'm like reading the transcript of what I said because like it was magical in the moment. So I want to make sure I don't like lose any of the essence of what I was saying. So number one, so we were looking at the potential clients' bank statements. Me and my student were doing because like sometimes like with the students in the mentorship program, we help them price out their services and we help them really understand like what is an appropriate price point, what makes up like a good client versus a bad client, where is the value that you're going to be able to bring when you actually start working with this client, and just making sure they feel really comfortable. So we're looking at the client's books, and it looked like he was losing money every month because he was withdrawing more than what he was taking. Now, for someone as a beginner, like, oh my gosh, is the company insolvent? And it's like, it depends. Based on the information that she had, she didn't really have enough information to kind of determine whether or not he was going bankrupt. In my opinion, just based on me like knowing how business works and like how a lot of business owners like move money, it's really important to kind of know that like once you're working together, like you need to know more about like where is he actually putting that money. For example, like me, I have a payment process that sends money to my main account. So let's say I send someone an invoice through QuickBooks, right? So then from QuickBooks, it gets basically the money is transferred to my main bank account. I then transfer that money to a sub account, and then from that sub account, I send it to my investment account. So, it's like a flow. So let's say, maybe for example, in the sub account at the end of the month, it might say like, it's negative or the transfers that were put, the withdrawals that were put were like 10,000 or 20,000 a month. But that does not mean like it left my life per se, right? It was just moved someplace else, or maybe I withdrew it at an ATM to go and purchase gold or purchase something, right? Because a lot of these gold investment places are the cash. So it's kind of like, yeah, so it looks like, man, you just withdrew like 10 grand this month. It's like so it's like it looks like I spent $10,000 on just random stuff, right? But I didn't. I just went and bought a new asset, right? And that's another reason why bookkeeping is so important, right? Because if I don't account for that and I don't know where that money went, and then maybe comes tax time, like the IRS can be like, well, hey, what happened to that 10,000? What happened to that $20,000, right? So it's all about really having like the bookkeeping, right? Because the bookkeeper is going to be watching my back. And it's basically for when tax time comes, I'm looking to have like a detailed report on like my P&L, right? Like, did I spend the money on advertising? Would I spend too much on vacations? What did I spend on my car? What did I spend going out to the mall? What did I spend going out to dinner? What did I spend on eating? And within there, the bookkeeper can then flag a lot of those different like transactions as like personal expenses, um, and just different things, right? So now when you have the bookkeeper, right, you know exactly where everything is being spent, and then come tax time, your tax person can then take a look at like exactly like what's going on. They'd be like, okay, so cool. So let's say, for example, that we did about $50,000 was spent, right, over whatever period that we're talking about. So 10,000 of the 50,000 was on personal, 40,000 was on business, right? Now I can basically go if I'm the tax person or the CPA or whoever's doing the tax, I can go work my magic and I could be like, try to reduce how much of that income the person made this year based on like what's going towards like business expenses. Then depending on how aggressive the CPA is, like he or she could go and like look at the personal expenses and then basically be like, they can kind of make an argument that a personal expense could potentially be a business expense. Like it could be like maybe you went out with your wife, but it's like, just between you and me, maybe you guys talked about business just a little bit, like you could write down some minutes and like what you talked about, right? And then it's like, 50% of that, it's going to be towards like a business expense. Or maybe it could be your car or your mileage, like, um, just really making sure they have everything like logged and tracked. Because if someone doesn't have it logged or tracked, they can't really do any of its like tax time magic, right? So that's why it's really important, level one. Now, level two becomes So just to recap, level one is basically just reconciling and doing like the transactional elements of bookkeeping, just so that someone else, the business owner and like their CPA can come on tax time and just make everything as clean as possible and pay as like little as tax as possible. That's the kind of zone that most business owners are in, especially if they're like below about like 500K per year, right? They're basically just trying to like recreate their job with like a business. So they just want to absorb as much cash, live as good of like a lifestyle as they possibly can, and then everything else is good from there, right? But level two bookkeeping is going to be for business owners that are at a little bit more of a higher level, right? They're going to be looking at what's going on and like what they're doing each month to make business decisions. So for example, let's say for Bryce's consulting business, right? I do like advertising sometimes, not all the time, but sometimes. And I can track my advertising every like 30 to 60 days and say like, how profitable was this? Right? Now, and in a lot of cases, it's like, is it worth it to keep either doing the same type of advertising or is it not really profitable based on some factors like revenue comes in, money spent out, right? And in a lot of cases, like the money that comes in from the advertising could be four times as much as went out on the actual ad itself, right? So I'm putting $1 in, I'm getting $4 back in some cases. But there might also be some associated fee with that, right? So it looks like $4 out, $1 in. For example, it could be I have a payment processor fee if I'm not using like a ACH, right? If I'm using credit card or debit card. It could be that maybe I have a salesperson that's doing either like generating the calls or actually taking the sales call. Maybe I could have some sort of special software. But for everything that I have and everything that adds up, right? It could either break even, right? So one, two, three, four different costs on four different inflows, right? Could break even, or in some cases it might be five, six, seven, eight, nine, 10 costs, and now the money that you brought in was actually negative, right? But if I don't know that because I don't have a bookkeeper, I'm not doing any bookkeeping, right? Then it's gonna be like it's really easy to lose money, right? And then at that case, like if you had a bookkeeper every single month, it's like, hey Bryce, I know that you spent some money and you made some good money, but you spent a lot more than usual. So like, was that intentional or not intentional? And then they're like, oh, in a lot of cases, the business owner is like, oh, I didn't know that was happening, or something weird was happening, or I didn't know this guy was still being paid. So level one of our service is just keeping things tracked, right? At tax time, everything's good. Level two is when you're starting to interact with the business owners and you're basically highlighting different things that are not regular. And some things can be a red flag for the business owner. Now, the next level, level three, is gonna be like you're basically taking examples from all of your clients and all of your like life experience, and you're basically helping the business owner predict what they should be doing based on their current books are like telling them to do. That's when people start talking about like CFO services, right? Um, it really is more about using your experience and using like benchmarks or using like trends or forecasting to be able to help the business owner know like what is around the corner. Like, okay, so your business is at like 250K now, but in order to get to the next level, this is what things are going to look like. This is what your allocation of resource is going to look like. This is probably what the hire is going to be. This is like what is normal in your industry. This is the time frame it should take for an average in your industry. Are we ahead of the eight ball? Are we behind the eight ball? And just making sure they really know a lot of this stuff so that you start becoming like more of their advisor. So that's why they start calling it advisory services. Depending on where you're from, if you're like more from like a small business background, they might call it advisory services. If you're more of like from a corporate background, we generally call it like, corporate controller or CFO. In some cases, they might call it fractional CFO. The only reason why they call it fractional is just because of the fraction of the full time. So the next level above that is going to be when you're handling everything. So you're doing the bookkeeping, you're doing the monthly accounting, you're doing the CFO, and you're also helping them with the taxes. Now, when I say the taxes, not just tax prep, right? That'd be more of like a level two, in my opinion, is if you do like the tax prep. But level four becomes when you can start doing the tax planning as well. So not only are you able to kind of help them know what's around the corner, but at each stage of the game, you can help them with their taxes and just making sure everything's as efficient as possible. So that not only are they bringing in more revenue, they're on a really healthy growth trajectory, they're more profitable. But now, even though they're getting more profitable, they're not necessarily having to spend way more on taxes because you have everything optimized there, right? So that's the big thing whenever people ask, like, what is a bookkeeper actually doing? Like, what are the different levels of like bookkeeping? Now, there's always a new level, right? Right. After level like five, it could be like, like I was talking like at the four levels, like the skill sets you have as a bookkeeper, but not necessarily like where you are in terms of your like big bookkeeper career, like whether you're at 0 to 10 clients, 100K per year, 50K per month. 100K per month, et cetera, right? But it's more the skill set of what a bookkeeper actually does at varying levels. Okay. So hope you learned something new. If you want some help, like really growing your skill set, whether it's learning how to do bookkeeping or learning how to run a bookkeeping business so you can go and like leave your job, you'll be like go and travel the world and spend as much time as you want with your family. Click the link inside the description above or below the video to book a call with myself. Let's see if we can help you inside our mentorship program, okay? I will talk to you soon. Have a good rest of your day. Take it easy.